Welcome everyone. Thank you for joining the call. So joining us today, everyone will know Jardee. We're joined by Jardee Kininmonth, the MD and CEO of Future Metals, and the incoming chairman, Patrick Walta. Pat, I think is okay. And
Yeah.
So Jardee's going to take us through a short update on the recent activity at Panton and some of the recent news regarding additional exploration tenement, which we put out recently. I have had some questions pre-submitted, and we intend things to be pretty informal. We're going to give you a quick 10-minute update, and if you have any questions, there's a Q&A box, which we would be delighted if you could use that and pop in a question or two there. And also, we're very happy to allow people to speak. The process of speaking is everyone's on mute, but if you'd like to speak, there's a little button. Hopefully you can find that where you can raise your hand, and I'll unmute you, and you can also ask a question yourself there as well. So I think we can go on. We're not going to take you through the whole presentation, but just a little bit of an update. And actually, if there's anyone who's unfamiliar with the story, then please do raise your hand, or don't be afraid to ask some of the background basic questions. But we're going on the assumption that most people will have some sort of familiarity. But please do speak up if there's anything you would like us to cover. Okay, guys. Over to you, Jardee.
Thanks for that, Sasha. Thanks everyone for dialing in. As Sasha says, this is supposed to be a fairly informal briefing for, given that I know a lot of you have been across the story and have been invested in Future Metal for some time. But I think it's worthwhile providing an update in what has been, a fairly significant, 4 to 6 week period proceeding now. On the back of the new resource coming out recently, and then obviously the impending acquisition of Osprey Minerals and particularly the Eileen Bore project, and what that means for our exploration upside and also for the project development activities at Panton. And then I think the element that helps tie that together and is also going to help mature the company and take it forward is the appointment of Pat Walta as well. And I won't front run his intro, so I'll pass to him after a short run through of the other two highlights there. So number one is the new resource. I have been touting for some time now that we are sitting on what is the highest grade PGM project in Australia by quite some margin, as we can see here. So importantly, this new resource obviously further drives home that grade advantage. But it's not just about the Australian sector, it's also about the global sector, because that's really what matters. And it's important to note that our high grade holds up very, very well to even the South African operations and also the Russian operations, which is where the majority of PGMs come from. But it's not just the high grade, it's also the high grade and the mineralized material that sits around that. And that's really important to note for how we're taking the project forward and putting a scoping study around it, because it really allows us to mechanize this operation, broaden those mining widths, drive really good efficiencies of scale in the mine and at the mill, to what I think is going to show, I'm fairly confident in saying this, is a long life, low capital and very globally significant in terms of PGM production project. And further to that, I think Panton's really, or Future Metals is really going to present post this scoping study as one of the only ways to get pure play PGM exposure, given that pure play PGM exposure in a top tier jurisdiction, given that, as I say, the majority of production does come out of South Africa and Russia, which are basically uninvestable in their current states. The scoping study is pushing ahead very favorably. We've had the resource with the mining engineers for some time now, so we are starting to get back those mine designs and those mine schedules and starting to put a capex estimate together as well. So we're red hot on getting that scoping study out before the end of the year, so this quarter. And again, very excited to to really show the market, what Panton can and will be. To append the project development activities, and I've always said that we're a company of really two value levers. It's really about the project development in the high grade deposit that we do have, we already know, and that really sets a baseline for a value. And I think it provides a platform for value growth, obviously, from here as well. But we're also an exploration company. We're sitting on a very prime piece of real estate in a very mineralized corridor, which is evidenced by the fact that IGO, which is one of the biggest nickel and lithium producers in Australia, has been picking up all the ground that they can around us. And so to further complement our existing ground position, we have written that option agreement with Osprey Minerals. And that really gives us some very tangible exploration upside outside of our existing deposit, particularly in the Eileen Bore prospect. This is a very exciting addition to the stable, not only from exploration upside over and above what's already been drilled, but also what that deposit can add to what we're planning to do with Panton. So we see that as being highly complementary to the project development activities at Panton. And the reason that is because it's 15 kilometers along a dirt road. It's basically next door to where we plan to build the plant. So we're keen to work that into next year's plans on drilling that out, understanding the metallurgy a bit better, and potentially working that into the overall project development plan there as well. Just to point it out, I mean, these intercepts are ore grade and they're ore widths as well. I mean, it's been drilled only over a strike of 400 meters. Geophysics shows that it extends over potentially 2 kilometers, and it's open at depth. Its mineralization starts at surface. It's a very compelling additional deposit to our already compelling deposit at Panton. And that really moves to introducing Pat. So Pat's the executive chairman elect. Again, I'm not going to front run his background, but I think we'll pass to him and get him to walk us through his background, but also why he's joined Future Metals. Future Metals has been, and the board have been talking to Pat for quite some time. He's an experienced metallurgist. He's done his due diligence on the project, and he's got an excellent background. So clearly that says, I think, something about the investment proposition of Future Metals as well.
Yeah, thanks, Jardee, and hi everyone. It's great to be doing these sorts of video calls again after a while out of the saddle. I'll, if you allow me, I'll give you a bit of background into what I've done before, and it ties in quite well to what I personally see at Panton and Future Metals. I think you're all shareholders, prospective shareholders in a pretty special project that may not be aligned with the market just yet. So as Jardee said, I'm a metallurgist by trade. Been principally involved for the last 7 or 8 years with a company called New Century Resources, which I founded along with a team, where we acquired the Century Zinc mine in Queensland in Australia. And Century is quite analogous to Panton in its state of development and the opportunity around it, and probably also the perception in the market. It was actually a closed mine. It was the largest, third largest zinc mine in the world, and it had run for 16 years. And the mine was slated for closure. We actually were successful in completing a deal to acquire it off a Chinese group called MMG, and we looked at the rapid restart of the mine based on all of the sunk capital. And sorry, I've just got a message there to put myself on the big screen. That's popped up. We had a simple plan to utilise the sunk capital and the existing deposits to restart the mine. and get it back up and running. This one, for the case of Century, was tailings reprocessing there. So similar to Panton is that this is an asset that it classifies geologically de-risked, but it needed some metallurgical de-risking around the tailings. But being a metallurgist by trade was certainly my preference, my backyard. And so the team we were able to build was able to grow very, very quickly and get that operation up and running. So we spent about 3 years negotiating the asset acquisition. We ended up acquiring it in April 2017. By the end of 2017, we'd completed a full bankable feasibility study, and we raised a couple $100 million in debt and equity in early 2018, and we restarted the mine in late 2018. And then by the end of 2019, we were the 13th largest zinc producer in the world. And so it was able to utilize all of that sunk capital and all that effort of others previously to get an operation up and running quickly. And yeah, we built a team from 0 people to 350 people. And Century, over the 5 years since then, Century has maintained its status as a top producer, produced over, I think, nearly 1.5 million tonnes of zinc concentrate, and was recently acquired earlier this year by a large multinational gold and PGM producer called Sibanye-Stillwater. So that was a great experience for everyone involved. And really, after a break, got introduced to the Panton project. And there's a lot of parallels, a lot of opportunity with this sort of asset to leverage what has been done previously to create a whole heap of value and to get an operation up and running from in a comparative mining perspective quite quickly. So timing the market, utilizing any sort of momentum in the PGM prices, and get this asset up and running. And the opportunity with Panton, I believe, is quite special, and there's a number of reasons to that. Is one, its location, it's in Western Australia, huge tick, particularly when you compare where 85% of the other PGM production in the world comes from. As Jardee said, they're quite simply uninvestable. We've got Russia and South Africa being the principal producers. It's an opportunity for that tier one supply, or that safe jurisdiction supply, to come online and supply the Western world with for the green energy revolution as well. The other important factor about Panton is the grade. The grade is really important here for being able to get a large operation up and running, but a cost-efficient operation up and running. So we see big low-grade projects. Chalice, for example, being quite, has been the flavour of the month previously, but they are challenged. I mean, they need huge capex numbers, and they're not without their complexity in terms of their flow sheets, because they have to extract every single minor metal possible to get the equivalent grade up. So having that high-grade core, that reef that we have here at Panton, is hugely important. And then surrounding that reef, obviously, is lower-grade material, but equally as useful in terms of bulking out the tonnage, and as Jardee said, mechanising the mining and being able to produce a sizable operation. The minor metals associated with Panton are great. The grades that have been reported here utilise only a fraction of those, so we should be able to get those additional minor metals into the actual overall grade equivalent as we go through this feasibility process, which is only going to bolt on more to that value. The third, and I think is one of the most important opportunities with Panton, is the scale of it. So again, it doesn't look like much at the moment. I mean, it's the company is small by market cap terms. Scoping study is not out yet, so probably the market hasn't got a flavour about just what Panton could be. But even off relatively small, what I would classify as small mining rates, 1 million tonnes per annum. Comparison, we were doing 9 million tonnes at Century. But 1 million tonne per annum mining rate should put Panton to being north of 100,000 ounce per annum palladium producer. And that would be, in the decades sort of thing. So 10 to 15 years sort of mine life potential. Now, what does that mean? Well, that really puts Panton as a top 5 PGM producer outside of South Africa and Russia. So that's a relevant scale. That is a big scale operation. And it's an investable operation. So when you think about funds or anyone, family offices or institutions who are looking for investment opportunities, and maybe they might have a theory, for example, that PGMs are going to the moon. Maybe not today, maybe tomorrow, whatever. If they have that investment theory, naturally they start looking for how do they leverage that investment. Where do I get the best bang for my buck? As we all do as investors. That gives Future a great opportunity to present as that investment vehicle, because you can't invest in any of the others in the top 5 because they're typically held by either multinational companies, the diversified miners, or the other operations are in uninvestable countries. So Panton and Future provide that beautiful, pure play, simple metallurgy, big resource, low capital opportunity to generate a sizable operation that people kind of have to invest in if they have a thesis around PGMs, which invariably people do, and particularly as we'll get some momentum in the PGM prices over the next period of time, it becomes a really attractive investment vehicle. And I think so sort of strategically and commercially, the business sets up really well like that. And now where the business is coming from right now, it is, we'll all agree, it's ridiculously cheap. It's trading almost at borderline shell value at the moment. So the market certainly is not fully up to speed, or certainly not valuing the potential of the asset and of the company. And that's really what we're now here to do, is myself and Jardee, is to really start that push. So the first kind of shot across the bow was the resource that came out a week and a half or so ago. Probably a bit of an eyebrow raiser for a few people to realise just how high grade it is, and particularly when you focus on the high grade core, 37 million tonnes at 3.3 gram equivalent. I mean, even if we mine this thing at 1 million tonnes per annum, as I said, well, there's a 30-year operation. So, how do we get this mining rate higher? How do we produce more? That's going to be our goals. So big long life operation just on the high grade material there. As well. So we'll focus on that. We've got the resource out now. Scoping study obviously is the next thing to come out as well. And again, we start to put some meat on the bone. We start to wrap numbers around it. And, we believe this thing can stand up nicely, even at what we'd classify as depressed metal prices right now. So the upside, any upside in terms of PGM price momentum is going to be have a multiplier effect for us, because people will see the numbers and they'll know what price does to those numbers as well. So next year, so we execute the scoping study. Next year should be quite strong for us in terms of the corporate development, and also building out the team that is ultimately going to turn this mine on. So as I said, back in the day, we took New Century and the Century Zinc mine from a team of literally 0 to 350 people inside 18 months. Now, I'm not anticipating Panton wants to or needs to grow that quickly, but we know how to do this. So as we bring this through the study phase next year, we'll get good news flow from that, but also great news flow from the acquisition that Jardee did around Osprey. There's some great drilling hits there. That'll be an excellent part of the news flow, and we build momentum in the story there as well. So it's kind of a great time for the business. We can now quickly move it through these development phases. Ultimately, we all need a little bit of luck with PGM prices, but we've positioned so well to give for that to happen and give us a multiplier effect and be ready so that we can pull the trigger and actually get the mine up and running. And ultimately, from what I can see and what I've seen to date, it's a pretty attractive opportunity in terms of generating that long life asset, which you just really don't get too often. And if you do get them, they're not in Western Australia. They're pretty hard to get a hold of. So that's probably my 5-minute diatribe, Sasha and Jardee, about why I'm here. I'm refreshed and keen to get stuck in and grow some value for shareholders.
Really good, Pat. Thank you very much, and look forward to seeing and hearing more from you. So, Jardee, if there's anything you want to cover now, we can go to that. Otherwise, I'll let the audience dictate the direction we're going to take this in. I have had some pre-submitted questions, and look, everyone, if you want to ask a question yourself, then please raise your hand, and I'll unmute you. I've had a brand new question just come in, actually. So from Darren Morgan, Jardee, can you can you explain the significance of the mining and processing breakthrough you reported back in February? Will this materially improve the economics in a way that perhaps the project's predecessor wouldn't have known about when Future Metals acquired it? So actually, I think it'd be good going into the history of the metallurgy at Panton and the breakthroughs that we've reported on so far. So yeah, over to you, Jardee. And you can see the question in the Q&A box if you need to refer back to it.
Yeah, no, it's a fantastic question, Darren. I think the genesis of some of that metallurgical history was really developed in the early 2000s when Platinum Australia had the project and they were taking it forward. They were the first ones that put a bankable feasibility study around the project. And really their hang up was on the ability to produce a saleable concentrate. So they were able to get good recoveries, circa 80 to 85% from flotation. But their concentrate grades were 20 to 25 grams a ton. So even back in those days, the real prices were lower than they are now. And certainly trying to ship concentrate that's sub 1 ounce per ton or 20 to 25 grams a ton, proved to be pretty uneconomic. So yeah, there was also issues around the chrome grade in that concentrate going to South Africa, which some of the smelters there don't love having high chrome, and really that's what caused Platinum Australia to really step away from Panton being their focus, and then they moved to a South African PGM operation, had issues there, went into liquidation. And ultimately Panton was sold in 2012 to an ASX listed nickel producer called Panoramic, which owns the Savannah mine up the road from Panton. They really bought Panton as an option over the PGM price. They bought it for a song, and really just sat on it for a long time. So they sat on it for about 8 years until the founders of Future Metals acquired it out of Panoramic. But what they did do in that 8 years is focused on the metallurgy. That was key. They knew there was a high grade deposit there. There'd been a lot of drilling put into it, and they really did, start the ball rolling on cracking the code there. It didn't end up being anything novel at all, really, that solved it. It was really borrowing a reagent regime from another nickel mine in Western Australia called Mount Keith, owned by BHP, and one of the big unlocks there that they had was adding a reagent called sodium diethionide into the mix, and that really boosted recoveries while also boosting concentrate grades for them. So they worked that into the mix, adjusted grind size, and lo and behold, took it from 20 to 25 grams a ton to 200 plus grams a ton. So that's completely game changing in terms of the value of the product that you're trucking up the road and putting on a ship. So that broke it wide open. And then really what Future Metals has done is built upon that initial work or advancement by Panoramic, and has now bettered those results, created more conventionality in the flow sheet, and demonstrated repeatability as well. So Panoramic did have some issues demonstrating repeatability. We can now produce concentrate grades of 250 grams a ton, time after time on that reef material, and get pretty decent concentrate grades on our high grade dunite there as well. And then the additional unlocks have been including chromite into the resource. Chromite's a very significant and very high value co-product, particularly now. The market for chromite's up at US $300 a ton. The reason that it's so valuable for Panton is that you already pay all the money to mine the product and mill the product down to the right size. It's a very small addition to the flow sheet to put in a chromite float or a magnetic separation circuit to pull that chromite concentrate out of the feed before it goes into the tailings dam, and then you get to sell that product for $300 a ton US. So that's we see that as being a massive string to our bow. And then the other small addition as well is the inclusion of tailings leaching. So using a fairly conventional resin in pulp circuit to really boost those recoveries by circa 10% overall. And that feeds back into the concentrate, the PGM, the high grade PGM concentrate that we're producing. I guess the last thing to add there is the ore sorting as well. This ore body is the ore body that you would build a case for making ore sorting work, more so than any other ore body. The reef is very, very dense, and the surrounding mineralization, the surrounding dunite, is 30 to 40% less dense, and that's what the ore sorter works off. It measures the gravity of all the material that goes through, and basically the larger difference that you have between two materials in density, the more effective that technology is. So ore sorting works really well, and it has allowed us to really up the development rates in the mine, which has allowed us to really bulk out how much material that we can pull out of the mine. And then once it's at surface, it allows us to run flotation circuits for each, specified for each of the materials, and really up those recoveries and concentrate grades based on the specific mineralization within each. So that's there's probably been 4 or 5 steps that Future Metals has really added to what we acquired to now allow us to build and come out with this scoping study, and really demonstrate that it's a much different investment prospect and development prospect relative to what it has ever been in the past.
And just to put a finer point on that, from what Jardee said, is that the market is certainly anchored on 20-year-old data. This is an old, certainly in Australian context, it's an old, well-known story. So it's not the fresh new thing that's around. It doesn't have its, the problems unknown about it. And so really a lot of these new developments and the breakthroughs have been made have been missed. And in the context of what they've done in unlocking the ore body have been missed. But what's been generated is, first of all, it's a very simple mining operation. It's exactly what they do in the bushveld in South Africa in terms of mining a reef and mining the surrounding widths around it. And secondly, it's a simple process flow sheet. You're talking about crush, grind, float. There's no autoclaves or roasters or any kind of exotic things to do here. So it's a decent flow sheet that's very repeatable, and able to get up and running. So that again, the value of this flow sheet and what's been achieved can be demonstrated in the scoping study, and then moving on to the other feasibility studies.
Thanks, guys. I was just going to say that there's a couple more slides on this in the presentation, which if it's not on the website already, it will be if you want to run through those separately. I've had a few questions come in relating to PGM prices and why they're so depressed now. Pat, you touched upon the leverage to PGM, the PGM market for the project, and gaining momentum when they move. So why is the market so depressed, and what are people forecasting right now? It's not the exact questions, but there have been a few of them come in. So that's, I think, the thematic that we could maybe touch upon.
Yeah, thanks. And I'll Jardee can answer if he's own free will as well. I'll just also cover off Marcus Perry's comment about waiting for PGM prices to recover before making a decision to mine. Now, that's not actually the case at all. It's about momentum, like everything. If PGM prices do recover, or as they recover, it will be infinitely easier to secure funding and develop this mine. Now, that's not to say that we won't be trying to do that before that. We've got to demonstrate the economic viability of it via the studies and take it through its final approvals processes. But this is not, I don't see this as a uranium style play where we're waiting for X dollars per pound before we can pull the trigger or anything like that. I personally have no interest in sitting around waiting for macro movements before trying to develop something, that's for sure. So we'll certainly be working in earnest to get up and running in any price environment. But having price momentum is a huge lever for getting projects up and running. What is key is you have to be ready to utilize that price movement. You can't be still drilling and exploring and that sort of thing. You have to have your feasibility studies and your developments and your developments in place. So that just to cover off that question there in itself. I mean, PGM prices in themselves are very much a slave to macroeconomic growth in the market. So we are obviously in a period of economic instability in terms of global GDP and growth. That flows through to a lot of it is due to autos, semiconductors, that sort of thing. So high-end technology that ultimately utilises PGM material. So there are questions on demand at the moment, and really that leads through to depressed prices. Now, how long that lasts, I think you'll get every analyst providing you with a completely different answer, and I don't think anyone truly knows. There is a myriad of factors in it, but we all have confidence that the mining and particularly PGM, so precious and base metal prices, are always operated in a cyclical environment. So we're at probably the depths of a low right now, which creates a lot of supply constraint. So we are seeing mass layoffs in certainly not in the Russian ones. We don't hear about those, but the South African producers. We're seeing mass layoffs of staff in the tens of thousands, which is a clear sign that those operations are struggling, which is obviously a clear sign of supply cuts coming in. So supply cuts starting, any sort of movement from the demand side, you start to get a decent reaction in prices. And we know you don't have to look at the platinum palladium price history. When it moves hard and quick. So you've got to be ready to take advantage of those things. So, Jardee, I don't know if you want to comment any more on the macro.
You got a good slide on some of the demand elements on slide 5 as well, Jardee, just to remind you.
Yeah, I can put that. I think maybe a more technical, specific point to add there is that the PGMs are refined on a very long dated basis, so there tends to be a build up, and then they sit in the refining circuits for between 3 and 6 months before they hit the market. So as Pat said, the PGM prices do react very quickly once there's that demand driver, either to the positive or the negative. And we've obviously been on the other side of the negative when there's been a lot of build up in these circuits on the back of very high palladium prices. And then we've entered what is basically a recessionary period, and how that flows through to auto demand, etc. Just as all of that extra supply has been coming out of the refineries. So, we have now been in the doldrums for over 6 months. So I think the expectation is that the PGMs in circuit are going to be much more reduced. And again, once that demand starts to tick up, there'll be an aggressive reaction to the upside there as well. And further to what Pat said, current prices would see probably 30 to 40% of PGM ounces not really making any money, so sitting at the kind of midpoint of the third quartile on the cost curve, and that's a key sign for for potential price upside as well. The cure for low prices is low prices, because it obviously drags supply out of the market.
Okay, thanks, guys. I think that's probably covered that theme. Another one on how you intend to develop the asset. Are you looking for strategics at the moment, or do you tend to go on your own? I think, Marcus, that's another kind of theme from you. And then Marcus has also asked if we're looking for an investor to bootstrap development, or are we looking to do this on a grander scale to understand the various prospects before building out Panton?
Yes, I think in terms of talking to strategics, we have been talking to a multitude of strategics for some time now, both across the exploration and project development front. These guys don't tend to move quickly, but there have been a few doing the work. I think the scoping study helps narrow the focus and really highlights what the project can be. Obviously, not just to the market, but also to these strategics. It's a somewhat iterative process at the moment, having just got a new resource out and still in the design phases. Again, what that study will do will allow us to sharpen those discussions up and potentially drive a decision point. That being said, it's where the share price is now, and where the PGM prices are now. It's potentially not the time to be looking at taking strategic money as well, given that we think there is plenty of upside from these prices, per Pat's comment about being close to shell value. We're trading at $3 to $4 per ounce in the ground, and we don't want that to be a price driver for any deal done with, on a big lick of capital that would come from a strategic.
Yeah, I tend to agree. I think there's way too much value on the table to be letting anyone of significance in yet. The strategy of the business may evolve to this. It's not defined as yet. Is that there is a simple planned solution here to bring the asset into production, which is focusing on the reef and the high grade dunite that surrounds that reef. Now, that's a great story. The capital is not inhibitive. There is quality teams available that can do it. Just a matter of putting the pieces of the puzzle together to get that done ourselves there. The blue sky strategic partner opportunity still remains, and that really is around the bulk dunite play that may happen in 2 years, 10 years, 20 years sort of thing. But that is a huge resource there. If you think about it, okay, we're only talking about 37 million tonnes at 3.3 grams a tonne equivalent. That's sitting inside a nearly 100 million tonne deposit there. So there's a massive bulk out opportunity here that can occur. Now, that opportunity, once you're up and running and you've developed your mine and you're a top 5 producer outside of South Africa and Russia, there's your big blue sky that a strategic can really invest in. Say, okay, I can double or triple production with a big capital injection, and I can make this thing amazing. It can run for the next 40 years as that, because the reef continues, the dunite continues. It hasn't been drilled out. It's not closed off in any way. We've got more than we know what to do with right now. So I think that's really the opportunity, is consummating a fair bit more value, an extreme amount more value before we brought in a strategic that would ultimately slow things down. In reality, a strategic is going to have different initiatives. They're going to have a slower pathway. They're going to have different hurdle rates and probably a different agenda in terms of wanting access to the offtake or something like that. So, we need to. It can be a blessing and a curse getting them involved, particularly early days. I think things would slow down and you wouldn't end up seeing that value creation that could occur for existing shareholders.
Thanks, guys. I think that naturally we'll move on to current plans for funding and cash and the cash levels there. So I think the market's just a little concerned about going to market in this current environment and your plans there. So potentially that's another one for both of you.
Yeah, no, obviously the cash position does warrant that, taking the project forward past the scoping study will require further capital. There's certainly no discussions being had and no intent to undertake a raising ahead of that scoping study coming out. I think the events over the last 4 to 6 weeks have really got tongues wagging in the, at least the Australian investment space, about Panton. So it does provide us an opportunity to bring in some not strategic partners, but potentially quite credible capital partners that help validate the company as well. I guess I'll add to that in that it's not going to take a significant amount of capital to take this from a scoping study to a PFS. I think Pat will attest to the level of work underpinning the scoping study is quite a lot. A lot of companies can put out scoping studies that are basically drawn on the back of a napkin. This isn't that. We've built it up from 20 years of work, appending obviously the 24 months of work that Future Metals itself has put into it. and we've got a very large amount of drilling to draw on. So it's again not going to take much capital to take this through to the next stage. And again, next year is all about potentially all about corporate development and running that PFS forward as well. And with a bit of support from the PGM prices, I think we'll make sure we keep the capital base tight so that we're leveraged to that.
Yeah, no, all good points, and I agree with your comment there. Even the scoping study is borderline PFS, to be honest. I mean, the resource that was previously available prior to future owning it was a measured and indicated resource. It's actually been dropped down on conservative assumptions, so it won't take too many holes to pop that right back up. Revalidate metallurgy and bring the scoping study, evolve the scoping study into the next stage of feasibility and development. So the business will be able to do that by making prudent in capital investment decisions. And it's not just a matter of raising money; it's about raising quality money as well. So finding investors and groups that are going to follow the story and support the stock is very important. For my sins at New Century, we completed or led the raisings to about $350 million in debt and equity over the journey. We had quite a lot of success in sourcing funds, particularly out of New York, but funds that wanted to make that sort of focused bet on, that was zinc at that time, but there's a similar opportunity here with PGMs that I can see unfolding. So you're able to get good, supportive shareholders that, as the share price rises, there will be more volume because people will naturally get out. So we have to turn this register over 3, 4, 5 times as this market cap grows and it goes on that journey. So we've got to find not just any investor, but quality investors. But as I've banged on about, it's the asset base has the ability to do that, and so we're really only just at the start of that journey about bringing those sort of investors into the fold. And as we deliver the scoping study, we'll have more meat on the bone to be able to get them up the curve and get them investing as well. So that's our plan. It's certainly going to be a case of making prudent capital decisions over the next 12, 18 months, 2 years, leading into getting minimal dilution financing ultimately for the asset as well. So we're very conscious of that, of those pieces of the puzzle as well, Neil.
Thanks, guys. So a couple of questions. Can you talk about the scope, what you're seeing in the scoping study thus far, and also if the scoping study is borderline PFS, can we move straight to DFS, BFS?
Well, I think we have given a few hints as to what the scoping study is shaping up to be. We're not going to surprise anyone with a massive capex bill. It's going to be long life, and that's leveraging high grade to produce, as Pat said, over 100,000 ounces of PGMs and really establish it as a globally significant asset. I don't think it's healthy to really go into much more detail than that at this stage. In terms of taking it forward, potentially skipping a step from scoping to PFS, that's something that we can examine once that scoping study is out. I think part of a scoping study is understanding what are the next steps for taking this project forward through the feasibility process, and potentially as a board we do decide to push through and take it all the way to a bankable study.
Thanks, Charlie. Do you have an idea of how much cash would be needed to get it to the PFS stage, and would you want cornerstone investors? I think we've touched on some of that already, but
I guess again taking it past the scoping study phase is part of the scoping study work stream. So we'll obviously have more visibility on that once we come out with the scoping study. But again, it's not going to be a significant quantum of capital to take it forward in our eyes. And yes, as we've touched on, certainly potentially looking for cornerstone investment, but it's all about rifle shooting those guys, those funds and investors that are committed to the space and committed to the company, and making sure it's quality, not quantity, that we go after on the capital base.
Thanks. A question about when Pat's joining the board formally.
But the AGM the 17th. So assuming the shareholders will have me, Sasha, I'll happily join, sort of thing. But I've still got to get the vote first. So, but yeah, I've been as a strategic consultant, call it, for about 3 or 4 weeks now, and I've been enjoying really getting involved and assisting Jardee in pushing everything forward already. So I'm sort of half in the chair, you might say, but looking forward to formally getting in the chair as of the 17th of November.
Okay, very good. Looking forward to that. Look, I'm going through the questions. I think we've covered a lot of things. If there's anyone who wants to ask one, please raise your hand or pop it in the box as well. We've just had Marcus again. Given the excitement in the market with copper prospects, would we want to accelerate Eileen Bore? Good question. Maybe Jardee, if you could cover the recent option agreement on the property, and maybe I think if we can go to the relevant slide there as well, that would be good.
Yeah, absolutely. So it is still subject to an option agreement, but we are currently seeking acceptances from all the shareholders and have over 75% of those in hand. So expect to have those back in short order and allow us to bring Osprey into the stable and become a 100% owned future metals company. The great thing about the stable of projects that we're picking up here is that they're almost all of them, about 90% of them, are on granted exploration licenses with heritage agreements in place. That makes them imminently actionable for doing work on the ground. So we'll look to, I guess, work in an update towards the end of this month, particularly around Eileen Bore. What we're doing at the moment is building an integrated geophysical model. What we've acquired as part of that project is a very valuable data set that hasn't been put together as one before. And we think that's really going to highlight the upside opportunity at Eileen Bore, and really guide the targeting process for early next year, drilling that out. If the board decides to do so, which I believe we would be pushing forward with. And part of that is also potentially examining, there's 400 meters of mineralized strike here already on decent widths. Maybe it's worthwhile infill drilling that, to some degree, and putting a resource around it so that we can work it into any study activities as well. And that includes doing some metallurgical work there too.
Yeah, and again, I'll just throw my two bob in there. I really like Eileen Bore. I like the concept of it and the strategy of it for future metals. It makes Jardee's done a great job in getting a really cheap deal done. I think the business is really cheap, but when you look at Eileen Bore, there's obviously a tenement package, and we'll see what happens with the rest of it as well. But Eileen Bore in itself, you're 120 meters at 0.73 copper. Okay, that's interesting, but it's not 0.73 copper. It doesn't take too much imagination to realize that's nearly 2% copper equivalent from surface. Those are unbelievable hits. Now, I can't. We're not able to. We haven't validated that. Haven't been able to confirm it. All the metallurgy has to be done, and all the proper reporting is done. But it doesn't take too much to realize that when you add 0.3 nickel and nearly a gram PGM 3E, you're pushing that copper equivalent grade right up there to a serious hit. And again, okay, that's an asset sitting in the Kimberley region of Western Australia. Well, no, it's not. It's an asset that sits 15 kilometres from Panton, and we have every intention of turning Panton on. That means that's going straight into that plant, because you're going to use exactly the same flow sheet to put it in. So how big's the deposit going to be? Who knows? We'll drill it out, as Jardee said, wrap a resource around it. Hopefully it looks great. But the value per ounce or per ton or whatever of Eileen Bore is massive. because it sits next to Panton, which can be a viable operation to get up and running. So you've got a really simple pathway for bringing that up and running. You can see the dirt track on it, that material will go down that road and get shoved straight into that plant. So a great strategic acquisition for the business. It will generate fantastic news flow from both exploration holes pinging through it, getting hits, metallurgical work, which will allow us to wrap around copper equivalent numbers on it. And ultimately, people will be able to see the discrete value addition that will come into Panton by that feed. I mean, we'll literally be able to say Panton value proposition standalone, Panton with Eileen Bore coming in as well. So I think within time, that'll be proven to be a very cheap, highly accretive acquisition for the business that Jardee and the team have done.
Thanks, guys. Tony Wilson. If and when time allows, can we expect to see some board open market share purchases?
Yeah, I think the answer to that at the moment is that we obviously are in the thick of a scoping study process. So there's model iterations flying around. So there's clearly there's material knowledge that the board has in hand to basically dissuade our ability to do anything such as on market purchases. But I would certainly say that on release of that scoping study, we'll be keen investors again in Future Metals. Obviously, acknowledging that the board has, including myself, has made material on market purchases previously.
Yeah, I've been speaking personally, and as a potential board member, we're investors too. We see something as cheap and valuable as we're going to try and invest in it as well. It's as Jardee also said, it's pretty difficult as a board member of an ASX or AIM-listed company to get outside of a blackout period to buy anything. But there's still opportunities to do that, and I think as Panton continues to demonstrate its value while still being cheap, as a market discrepancy, of course we're going to invest. Makes good sense.
Thanks, guys. I think it's probably time to wrap up, unless there's one last burning question that someone's got. But I think unless Jardee, do you see anything or that you want to answer?
Yeah, okay. We're certainly keen to do a few more follow-up sessions, and Jardee and myself and be in person in London, in the near future. Without a formal plan, we're certainly very supportive of everyone that's been investing via the AIM listing, and I think it's a great opportunity to grow the business, and grow the profile of business outside of Australia. So, pretty keen to spend a bit more time over your way and focus on that investor base as much as the Australian investor base as well.
That sounds really good. Well, I guess the next opportunity is the scoping study, that we can certainly try and do something similar when the time comes. And if anyone has any questions that they think of afterwards, then please, get in touch with me. My contacts is at the bottom of the email, or email the guys directly. We'll look forward to doing this again. And please stay in touch. I think that's a wrap. Thanks, guys.